All right, let's dive into another deep dive. And today we're going to be looking at something pretty fascinating. It's a financial analysis from mapsignals.com. And, it's been making some waves. It's been getting a lot of people talking. And basically what they're saying is that we're on the verge of a potential Trump 2.0 rally. And that could mean a major market shift, particularly for what they're calling forgotten sleeper stocks.
Yeah, and what's really catching my eye about this analysis is that it doesn't just stop at, the surface level political stuff.
Yeah.
It really digs into some pretty specific market indicators. And, they're going all in on this idea of a tectonic shift happening right now in the financial world.
Yeah, and they're actually naming names too, right? They're saying that companies like PayPal, Shopify, and Carvana, names that most people recognize. They're saying that these companies could be, yes, you know, some of the big winners in this scenario, but it gets even more interesting when they start talking about historical trends and, the performance of small cap stocks.
Right. They're making this pretty bold claim that a Republican-controlled White House and Congress, historically, it tends to go hand in hand with strong market performance, especially when it comes to small cap stocks. They even put a number to it. They say that the S&P 500 sees an average gain of 12.9% in these situations.
So is that just, coincidence, or is there something more going on here?
That's the question, isn't it? I mean, historical data can be a helpful guide, but it's never a sure thing. It's not a guarantee. There are always other factors at play, the overall economic climate, global events, even just investor psychology. Trying to reduce market performance down to just one variable like political control is probably an oversimplification.
Yeah, we definitely got to look beyond the political angle for sure. So let's dig into some of the specific data points they highlight. To support this argument for a small cap surge, they talk about this thing called the fifth largest buy day since 2009, happening right after the election.
Right, and this is where things start to get interesting. What they're talking about is this massive influx of buying activity from institutional investors. Think like big players, the pension funds, the hedge funds,
Yeah.
all pouring in the day after the election. And this wasn't just like, a random blip. They say the Russell 2000, which tracks small cap stocks, it jumped over 5% that day. And historically, when you see spikes like that, it often precedes significant market gains in the months that follow.
So that's a pretty interesting correlation. But could this just be, a knee-jerk reaction to the election results? Or is it a sign of something, bigger and more fundamental?
Yeah, that's a great question. And it's where we really need to start thinking critically. I mean, it's possible that some of this buying activity was driven by, short-term sentiment.
Yeah.
But the sheer volume of it and the fact that we're talking about institutional investors
Mm-hmm.
who tend to have, a longer-term outlook,
Yeah.
it does suggest that there might be something more fundamental going on.
Yeah. They also point to similar trends with mid-cap stocks, which are kind of, that middle ground between small cap and large cap companies. So it's not just one segment of the market.
Exactly right. And that's another piece of the puzzle that makes this analysis so interesting, because it suggests there might be a broader trend going on here, like a shift in investor appetite towards companies that are seen as having more growth potential.
So to illustrate this potential small cap surge, they zero in on a specific example, Palantir. Now, for those who might not be familiar, Palantir is a company that specializes in data analytics. They've got some pretty big government contracts.
Right, and they're using Palantir as a way to show
Right.
how this potential market shift could play out at the company level. They highlight a chart that it shows this recent spike in what they call inflow days and top 20 signals for Palantir.
I'm guessing some of our listeners might not be familiar with those terms. Could you break down what those signals actually indicate?
Sure, inflow days basically refer to days when you have a significant amount of institutional investment flowing into a particular stock. And then top 20 signals is their own kind of proprietary metric that combines various data points, including institutional buying activity, to try and identify stocks that are showing really strong potential.
So they're basically saying that Palantir is seeing this surge in institutional interest, which, aligns with their broader thesis of a small cap rally.
Exactly. And it's important to remember that, institutional investors, they have access to a lot more information and resources than the average retail investor. So, when they're making big bets on certain companies, it's worth paying attention.
Before we get too carried away with this Palantir example, it's important to acknowledge that even if there is this small cap rally, not every company is going to be a winner. There are always risks.
Yeah.
And potential downsides to consider.
Absolutely. That's something we'll definitely explore further as we dig deeper into this analysis.
All right, let's do it. So what are some of those factors that could make a company like Palantir vulnerable, even if this Trump 2.0 rally, really takes off? What are some of the potential pitfalls that investors need to be aware of?
Well, I think with Palantir specifically, one of the big things that people worry about is their reliance on government contracts. They've built a big chunk of their business around working with government agencies, and that can be kind of a double-edged sword.
How so?
Well, on the one hand, it gives them some stability, right? Government contracts tend to be longer term, and they're not quite as susceptible to, the ups and downs of the market. But on the other hand, it also makes them vulnerable to shifts in political priorities. If a new administration comes in and changes spending priorities, that could have a direct impact on companies like Palantir.
So even if this whole Trump 2.0 rally thing is right on the money, there's no guarantee that it's going to be smooth sailing for Palantir.
Exactly. And it's not just about, which party is in control either. You also have to think about the broader political landscape. Like even with a Republican-controlled government, there could be disagreements within the party or shifts in focus that could impact, government spending in certain areas.
That makes sense. Yeah, politics is rarely a simple equation.
Yeah.
So beyond just the political risks, what are some other potential downsides that investors should be thinking about when it comes to Palantir or other companies in this space?
Well, competition is another big one. The data analytics field is getting more and more crowded all the time. There are a lot of companies out there fighting for market share. Palantir has a good reputation and a solid track record. But, they're not immune to competitive pressures.
Yeah, and we've seen it so many times, how quickly things can change in the tech world. What's cutting edge today can be obsolete tomorrow if a company doesn't keep innovating and adapting.
Oh, absolutely. That's a risk for any company, really. But it's especially true in fast-moving sectors like tech. Investors need to be sure they're not just buying into hype, but that the companies they're investing in actually have a sustainable competitive advantage.
So let's step back from Palantir for a second and talk about the bigger picture. This analysis paints a pretty optimistic view for small cap stocks in general. But like with any investment thesis, it's important to think about the other side of the coin too. What are some of the things that could throw a wrench in the works here, even if this Trump 2.0 rally does happen?
Well, one of the big wild cards is the global economic situation. We're living in a time of unprecedented uncertainty. Inflation is still a concern in a lot of places. Interest rates are going up. And there are geopolitical tensions kind of simmering in different parts of the world. And any of those things could have ripple effects on the market, no matter what's happening politically in the U.S.
So even if the U.S. market is set for a rally, a global economic downturn could still rain on the parade.
Exactly. And that's why it's so important for investors to diversify. Don't put all your eggs in one basket. Spread your investments across different asset classes, different sectors, different geographic regions. That can help you manage risk.
This is all really insightful. It's a good reminder that investing is never a guaranteed win.
Right. And, even the most informed predictions, they can still be wrong sometimes.
So we've got to approach all of this with a critical eye and not just blindly follow the hype or the latest trends.
Couldn't agree more. Do your own research, understand the risks, and make decisions that align with your own financial goals and your own risk tolerance.
Speaking of research, we've been talking a lot about the potential upside of this Trump 2.0 rally. But what about the potential downsides? What are some of the risks that investors should really be wary of?
I'd say one of the biggest risks is overvaluation. If investors get too caught up in the excitement of a potential rally, they might drive up stock prices beyond what's actually justified by the company's fundamentals, and that can create a bubble. And when those bubbles burst, it can be pretty painful.
So we got to be careful and not get swept up in the frenzy.
Exactly. It's easy to get caught up in the emotion of the market. But the best investors are the ones who can stay calm and rational and make decisions based on facts and analysis, not fear or greed.
That's such a good point. We all want our investments to grow, but it's got to be done in a sustainable way.
Absolutely. And that means being aware of the risks and making sure you're not taking on more than you can handle.
So this analysis is really focused on small cap stocks, but for listeners who are maybe a little more risk averse, are there other ways to potentially benefit from this Trump 2.0 rally without, putting all their eggs in one basket?
Yeah, that's a great question. And the answer is yes, there are. One option is to look at ETFs, exchange-traded funds, that track broader market indices, like the S&P 500, or even the Russell 2000 itself. ETFs are basically baskets of stocks that are bundled together, and you can trade them like individual stocks. They offer a way to diversify and potentially reduce risk.
So instead of picking individual stocks, you can kind of buy into a slice of the whole market.
Exactly. And ETFs can be a really good option for investors who are newer to the market or who don't have the time or the expertise to research individual stock.
That makes sense. So we've talked about the potential upside of this Trump 2.0 rally, the risks that investors need to keep in mind, and some alternative investment strategies.
Yeah, and I think it's important to point out, even if you're not totally sold on this particular analysis, just going through this exercise of thinking critically about potential market trends and coming up with a well-informed investment strategy, that's always valuable.
I completely agree. And that's really what we're all about here on the Deep Dive, right? Giving our listeners the knowledge and the tools to make smart decisions about their finances, no matter what's happening in the market or the political world.
Exactly. Knowledge is power. And in the investing world, that power can mean greater financial security and peace of mind.
Well said. All right, so this analysis we've been digging into today, it's definitely generating a lot of buzz, and for good reason. It's raising some really thought-provoking questions about how political shifts can impact the market.
Yeah, it sparked a lot of debate, and that's a good thing. Healthy debate and critical thinking are essential for making sound investment decisions.
Absolutely. So before we wrap up, I want to leave our listeners with one final thought. Regardless of whether this Trump 2.0 rally actually happens or not, the market is always going to be a dynamic and ever-changing landscape. There will always be opportunities out there, and there will always be risks. The key to success is staying informed, being adaptable, and never stopping learning.
Yeah, and that's where, the real value of a deep dive like this comes in. It's not about trying to predict the future, but it's about giving ourselves the knowledge and the right mindset to be ready for whatever happens.
I think what's really interesting here is that this analysis, regardless of, whether the predictions actually pan out, it makes us think about the connections between politics and economics
Yeah.
and investor behavior.
It reminds us that the market isn't this isolated thing. There's this whole web of factors that influence it.
For sure.
And if we can understand those connections, it can give us a real advantage. Absolutely. And it underscores how important it is to stay informed, not just about the companies we're investing in, but also about the bigger picture, the things that are shaping the world around us.
So as we wrap up this deep dive, what's the one big takeaway you hope our listeners walk away with?
That's a good question. I'd say for me, it's the importance of critical thinking. Don't just take any analysis at face value, even one that's as data-driven as this. Question the assumptions. Think about alternative viewpoints. And always do your own research.
Such great advice. It's easy to get caught up in the hype, when everyone's talking about a potential market boom.
Right.
But we got to stay grounded and make informed decisions.
And remember, too, investing isn't just about picking stocks or timing the market. It's about building a financial future that aligns with your own goals and values.
I love that. Taking control of your financial destiny. Making choices that empower you to live the life you want.
Exactly. And that journey starts with knowledge, curiosity, and a willingness to keep learning and adapting.
Couldn't have said it better myself. So for our listeners who are ready to take that next step, what are some concrete things they can do to apply what we've talked about today?
Well, if this Trump 2.0 rally has got you thinking, I'd say start by doing some more research on those companies we mentioned.
Yeah.
PayPal, Shopify, Carvana. Take a look at the Russell 2000 index. Maybe see if ETFs that track that index fit with your risk tolerance and your investment goals.
Great starting point. And remember, folks, investing is a marathon, not a sprint. Don't feel like you have to rush into any decisions. Take your time, do your research, and if you need to talk to a financial advisor.
Absolutely.
All right, so this deep dive has been a really interesting look at potential market trends and how important it is to make informed decisions. We've covered a lot of ground today, but as always, there's so much more to learn and explore.
For sure. That's what makes investing so fascinating. It's a never-ending journey of discovery and adaptation and growth.
Well said. Thanks for joining us on this deep dive, everyone. We hope you found it insightful and empowering. Remember, knowledge is power. And with the right tools and the right mindset, you can achieve your financial dreams